Assalamu alaikum. I'm Aksat Tariq and I'm here representing CXO Media. We are a technology media company, and today we've partnered with Ozoned Digital to bring you a CXO Leadership live session focusing on insurance. So today's session, Repurposing Insurance, will be targeting the insurance protection gap in Pakistan and the opportunities for reduction through the InsurTech industry. We have a very exciting session lined up for you with key stakeholders from the industry and people who've been driving the space with regards to technology and innovation and disruption in the insurance industry, an industry that's been around for years, but somehow there's a lot more to be done. And we'll learn today as to how technology can really, how the insurance industry can leverage technology to really, up their game when it comes to disruption. Very quickly, I'll just run you through the agenda. We have a quick keynote by the SECP CIO, Mr. Abdul Rahim Ahmed, followed by a panel discussion, which will be moderated by the CEO of Ozoned Digital, Mr. Naman Bashir. I would just like to quickly go through some house rules, especially just for the panelists. While we're in session, we'll just keep each other mute while the other person's talking. Anyone who has a question from the attendees, there is a Q&A where you can submit in your questions as anonymous or with your own name or a little bit of an intro. And we will open the session towards the end. So if you need any questions or if you have any comments to make, just raise your hand towards the end, and we'll give you a chance to speak up to the panelists as well. This will also be live streamed on our Facebook by the name of IDG Pakistan, where in case any of your colleagues or you would like to share it, please feel free to do so. With this, we are ready to start our first session of the day, which is the opening keynote by Mr. Abdul Rahim Ahmed, CIO SECP.
I'll start with the sector overview. So the insurance industry showed modest growth in the life or non-life insurance sector in the last calendar year. As of 31st of December 2019, the total assets of the insurance industry stood at 1,784 billion compared to 1,509 billion rupees as of 31st of December 2019, which shows about 16% increase in asset size on year-on-year basis. On the revenue side, the industry has underwritten the total direct gross premium amounting to 343 billion rupees compared to 326 billion rupees in the previous year, which shows about 5% growth in the gross written premium. The reinsurance premium underwritten by the only non-life reinsurance company in Pakistan, owned by the government of Pakistan, amounts to about 18 billion rupees. According to the sector-wise analysis, the life insurance industry owns assets amounting to 1,456 billion, and non-life insurance sector owns assets amounting to 328 billion rupees. On the revenue side, the life insurance sector has underwritten premium of 228 billion, and non-life insurance sector has recorded premium amounting to about 115 billion rupees during the year 2019. Now, in terms of your question about the low insurance penetration and using the traditional model, so we are all seeing the disruption happening through the insurance technology, which is better known as InsurTech. And in my view, this can close the protection gap in the emerging markets like Pakistan, where the protection gap is simply the underinsurance or the difference between the insured losses and the uninsured losses. InsurTech is a rapidly growing industry globally, and it's beginning to disrupt the traditional insurance provisions, both in advanced and emerging economies alike, and that is creating opportunities and challenges for incumbent startups as well as investors. So the opportunity offered by InsurTech is particularly significant in emerging markets like Pakistan, where a large protection gap exists due to low insurance penetration, as I mentioned. The major development implications due to the fact that the economic growth and insurance penetration are closely intertwined. So technology and new business models are necessary to close the protection gap in these markets, and companies will need to be able to innovate either internally by partnerships or by investing to seize the opportunity. I would relate this to the banking industry as well, where as State Bank of Pakistan, for example, has recently issued the draft digital banking regulations, and the idea is to bring in more competition and improve the customer experience. So yeah, so similarly for insurance, the customer journey from product sales to claim processing, which can have some bottlenecks, can be disrupted through InsurTech. Some of the reasons, some of the operational elements we know today, like the premiums are collected manually or through checks, as well as the product awareness is low. Similarly, the claim processing process is not automated. In previously, if you look at IFC, which had given an analysis that to close the protection gap for emerging economies, the GDP growth and the insurance growth go hand in hand. So this is very relevant to Pakistan, given the low penetration. And in terms of the demographics, a large population and increasing broadband, internet, and smartphone connectivity can make a good case for InsurTech. So, however, still there are challenges. It will take some time to capitalize on this opportunity. We still don't have a digital identity, for example, infrastructure in place. So, and similarly, digital payments mechanism is evolving, as well as the regulatory framework for different kind of insurance products and policy. So all these elements, work needs to happen, and this will lead to closing the protection gap in Pakistan. So I think, like if we see some of the other developing countries, and we've seen what's happened in China. If you look at in Africa, for example, in Kenya, so so for example, the one of the key areas for InsurTech penetration can be the mobile phone becoming a catalyst. So the mobile phone penetration, like I mentioned, is increasingly expanding in Pakistan, and this is where the opportunity is for, specifically for people who are financially included or low income consumers who can who don't often have the accessibility to brick and mortar financial services to really benefit from new and innovative products. So if you look at all the data coming through PTA in terms of the number of broadband subscribers, as well as the number of branchless banking accounts increasing. So that's where there is a significant opportunity for InsurTech adoption. The challenge, however, like I said, still remains for specifically around the product awareness as well as the financial literacy. In terms of the value chain, like you mentioned, I think similar to the banking sphere, where it's critical for digital services to have a digital identity stack. I think there is there's an opportunity to have an insurance stack, and using that stack, different kind of applications can be built on third party. Third parties can develop innovative products on it. So looking at the insurance stack, so you can build easy, simple to use front end applications. You can enable APIs to connect different insurance companies together. You can automate your claim processing, as well as managing your policies. Policy underwriting can be used. So we are seeing more and more use of machine learning and AI in this area. Similarly, this can again be used for financing purposes as well as connecting the insurance partners. So I think that these are the different some of the layers which can be part of the insurance stack, and the opportunities which exist to automate, streamline the operational processes, automate claim processing, or limit the manual paper or physical paper which is used today, and which can eventually result to faster resolution of claims as well. So during the last year, SECP has continued to build momentum of regulatory interventions by introducing facilitative measures for stakeholders and enabling innovations. Uh, so SECP's overriding focus has remained on three specific areas. First, to create an enabling regulatory environment for the business community, attract investment and spur economic growth by simplifying the regulatory regime through effective stakeholder engagement, and third, to improve the user experience through digitalization. Like you talked about the regulatory sandbox, I think it's been a groundbreaking initiative. This is Pakistan's first regulatory sandbox in the financial services industry. This allows limited scale of live testing of innovative products, business models, or services within the sandbox in a controlled environment under the supervision of the SECP. So the sandbox is available for all regulated sectors of the SECP, that is the insurance, capital markets, non-banking financial services, and the overall corporate sector. We had started our first cohort last year, which was announced, and we went through a process of reviewing, accepting applications. Out of 32 applications, we approved 6 proposals, out of which 2 were relating to digital insurance. So we have just announced our second cohort as well, and the idea is to again welcome new ideas, new innovations, which we can take forward and also help scale. Besides that, the centralized insurance repository for life insurances, life insurance was launched, which stores the information and details of life insurance and family takaful companies in a decentralized form. So this aims at assisting the underwriting function of the insurance companies to determine the appropriateness of the insurance policy, the level of insurance coverage, as well as the affordability of the insurance policy for the customer. We had also issued last year guidelines on cybersecurity framework. We talked about InsurTech, and it is extremely critical that with financial services going online and digital, the appropriate framework exists to make sure that the risk management measures ensure resilience when it comes to managing information technology systems for insurance companies, as well as for enabling the protection of private and confidential data. Besides that, so on the regulatory side, SECP had issued draft corporate insurance agent regulations, also the takaful accounting regulations. Similarly, the reinsurance broker regulations, and specifically for further ease of doing business, there was a reduction made in the regulatory fee to promote ease of doing business and to reduce the cost of doing business. Then there was an introduction of simplified submission requirements for life insurance products. There were amendments made to the Code of Corporate Governance for insurance. There's a draft insurance bill in public consultation stage, so which is aimed at the development of insurance market, improvement in market conduct of industry players, and improved compliance with international core principles of the International Association of Insurance Supervisors. Similarly, during COVID, several reliefs were given, both for the insurance as well as the corporate sector. So I think this is a quick summary. There's a lot. There's several measures which were taken by the SECP to facilitate and develop the market. And so moving on, I would say that both the public sector, the private sector, and other market stakeholders need to collectively collaborate, have stakeholder conversations, and work together to create a framework where InsurTech can be developed to increase resilience and the financial inclusion in Pakistan. Thank you.
Thank you so much, Abdurrahim Saab. He's actually the CIO of SECP. Over to you, Aksa, to keep the conversation going.
We will now move on towards the panel discussion, where we will be discussing, as rightfully the CIO SECP said, that the private and public sector needs to really come together and see what they can do in terms of insurance protection gap in Pakistan. So today's panel discussion, moderated by Mr. Noman Bashir here, will be discussing the insurance protection gap in Pakistan and the opportunities for reduction via InsurTech. I'd like to quickly just introduce our panelists for today: Mr. Wasim Khan, Director SECP, Mr. Mohammed Aminuddin, CEO TPL Insurance, Mr. Kashif Naqvi, CIO Jubilee Life Insurance, Mr. Mohammed Hisham, Insurance, who's also representing the Insurance Association of Pakistan and is the regional head for IGI Insurance, and and Barrister Ahmed Azair, he's a partner at AUC Law. So I will now hand it over to you, Noman Saab, to take this over. Thank you.
Thank you so much, Aksa. Before we start off with the panel discussion, obviously, I would like to sort of request the panelists to just give a brief intro about themselves, and we can just carry on the conversation from there. So I'd like to sort of reach out to Mr. Wasim Khan, who's a director at SECP. Wasim Saab, if you could just give us a very quick, brief intro about yourself, and then we will carry on with the others.
I'm Wasim Khan. I'm working in the insurance division of the SECP as a director and the head of department of the policy side. I'm working as SECP since last 13 years. Before that, I work in the central bank and in the commercial bank side.
So basically, I, Mohammed Aminuddin, am the CEO for TPL Insurance. By majority of my profession has been in financial services for the past 27 odd years, primarily in the banking sector, but I've been associated with the insurance sector for the 6 years. And with TPL, I've been associated since August 2018, and where we as TPL differentiate ourselves from the other players in the market is that our retail centricity and our digital DNA. So we'll talk more about that. Thank you.
Thank you so much, Amin Saab. May I request Mr. Kashif Naqvi from Jubilee Life Insurance for a small intro, please.
Hi, Noman. Kashif Naqvi from Jubilee Life. I've been with the life insurance industry for close to 26 years now, and I'm looking after the digital technology and strategic planning for Jubilee Life.
Thank you, Kashif Saab. May I request Mr. Hisham from IAP and, in fact, IGI General Insurance, Regional Head for Consumer.
Thank you, Noman. It's Mohammed Hisham. I am General Manager and Regional Head at IGI Insurance. And I've been associated with insurance sector from last 20 years, working in various capacities with IGI. Right now, I am looking after IAP North chapter as chairman of the Regional Committee North, and also the present chairman of Lahore Insurance Institute, both at IAP level and also at the institute level. We are striving to bridge up the technological gap that is there, and we have been dealing with many new initiatives on technology. So I'll discuss them once we are in the main discussion. Thank you.
Thank you so much, Hisham. And Mr. Ahmed Uzair, Barrister Ahmed Uzair, if you could just give us a little bit about yourself, an intro.
Thank you, Noman. It's a pleasure to be here. As Noman has mentioned, I'm a barrister, a partner at a firm called AUC Law. We specialize in corporate transactions. My personal primary experience is in the technology sector, and I've been a technology lawyer for the last 10 years. Thank you.
Thank you so much. Just a little bit about myself as well. This is Noman Bashir. I've been working with the insurance industry for around 20 years now. with multinationals as well as large national organizations within Pakistan. It was only 2020, I believe, that I kind of left the hardcore industry and started to work something out on setting up an InsurTech startup by the name of Ozoned Digital. So this is a little bit of an intro for myself, and with that, I will just go in fact, dive in directly into kind of starting a conversation from where Mr. Rahim kind of left it for us, as discussion points. There's what I could hear from him and what I've already seen from an SCCP perspective. There are multiple initiatives, and he listed out quite a few of them for all of us and all our understanding and knowledge as well. What SCCP has been undertaking last year, this year, and for some time in the recent past. And I think this has actually created that enabling environment. So just wanted to quickly reach out to Mr. Wasim and refer to what Rahim Saab was saying earlier on about how the digital platforms are being facilitated by SCCP. So I just wanted to check from you in terms of multiple distribution related opportunities that exist in the market at large. How is SCCP kind of facilitating the alternative distribution opportunities, meaning the ones that are separate or different from maybe the traditional ones like the agents and the brokers?
SCCP as a policy want to strengthen the InsurTech initiative with supportive and the protective regulatory environment. We are already working in the market with different participants for the multiple distribution channels for the product distribution, easy access to the investor. Currently, the approach we are using that we want to facilitate the new innovation in the alternate distributor models with the minimum regulatory interventions. We will focus only where the industry need any flexibility in the existing framework or need any new regulatory framework for the alternative distribution channels. Recently, we are working with the CDC for the distribution platform of the insurance product for the whole industry for the standardized products. Parallelly, we are also working internally, that's on our internal dashboard for the dedicated insurance regulatory framework, dedicated micro insurers. And in the draft insurance ordinance, we also recognize the concept of the InsurTech distribution, electronic distribution platform, digital distribution platform. So being a regulator with the minimum regulatory intervention, we want to encourage the innovation and what the model that the industry or the market participant is developing as per its own need. We want to accommodate that best practices in the regulatory framework in the context of the InsurTech before any regulatory intervention from our side. So currently we have allowed the different regulatory approvals to the different insurance companies for the online distribution of the product, online onboarding of the insurance agents, online training, online product distribution, online risk categorizations. Our focus is that there should be a very minimum regulatory intervention in this area so that at industry level standard developed, then the regulator can give this new concept through a regulatory framework or a regulatory guideline.
Great, excellent. So, just trying to sort of link up with what you just said, and it's heartening to see exactly, the kind of effort that you guys are putting in. One recent, example is the SRO that came out, I think in December last year, and it kind of lays out a lot of opportunities for digital enablement for various distribution opportunities, or for that matter, for the life industry and so on and so forth. So one of the things in there that we wanted to sort of reach out to you and sort of check from you is, when you talk about a digital experience and when you talk about an end-to-end, simplified, digital user experience, as Rahim Saab articulated, one main aspect today for any policy issuance is the KYC. So from a KYC perspective, one of the most important aspects is the verices, you can call it the AML, related activities, so on and so forth. So as of now, for any of the digital distributions to be really successful, the KYC aspect, will eventually need to be a more agile than what it is currently, which is purely manual or restricted access by NADRA. So do you foresee anything to change on this anytime soon?
KYC is the basic issue in the digital, I know, and I accept this. And SSP is continuously interacting with the NADRA to give access to the different insurance companies and insurance market player to the verices and the automatic verices. Currently, it's a manual-based verices system, and Commission is also working on the centralized KYC for the securities market, which is currently facilities available to the insurance broker, and we are also expanding it to the mutual funds. And future, this can also be expanded to the insurance sectors, because that central KYC agency has access to all the NADRA and OneLink and mobile portability options. In the context of existing FATF conditions and other framework, there may be some restrictions on the giving a flexibility in the KYC requirements, but the access of the data and the digital onboarding, facilitating the digital onboarding and digital verification of KYC, that can be considered by the Commission, and considered open to give any type of flexibility in the digital onboarding of the customer through the simple verification process.
I would just like to add something from the IAP platform here. One good initiative taken by SECP has been to provide banks with a portal where they can get all the KYC related documents. So again, IAP has also reached out to SECP, and now we are in negotiation with the SECP, so as the same portal can be provided to the insurance companies as well. So once that is provided, I think that will ease out the process whereby the companies have to reach out to the customers to get all those documents related to their registration and the updated list of directors and memorandum, etc. So I think this is one good initiative which has been taken by SECP for the banks, and I think that insurance industry is also looking forward for something similar quickly.
Thank you, Hisham, for the update on the actions that you are already undertaking with the SECP on this. Wasim sir, there's one more thing that we wanted to sort of connect with you on. This again, this is with reference to some of the steps that SECP has taken. I heard Rahim Saab mention about the investment-related environment that is being created by SECP for development of talent, be it in the same industry or a related industry, that really eventually helps in boosting up growth and premiums and reducing that production gap for the insurance industry. So just wanted to ask you, how do you foresee the actions and activities that SECP has undertaken on the investment friendliness for the new players in the market?
He is facilitating the new entrants in the market. As I discussed earlier, that we are moving toward, we are considering the digital only insurer with very minimum capital requirements. We are considering the pure micro insurer with very minimum paid up capital requirements and solvency requirements. The objective is that to facilitate the new entrants, technology-based entrants in the market to capture the InsurTech market and the new development in the technology, because we consider that InsurTech is a new area and the business strategy for this is different from the conventional insurance and a conventional insurer. So as a policy, we want to target the pure InsurTech based digital insurance. And for that, SSP is considering to provide a very flexible regulatory framework for new entrant in the market in the form of the pure digital only insurer.
Thank you so much, Wasim Saab. For the rest of the questions, I believe that there are, there may be questions for, for the audience or from the, from the panelists. I think we will take these questions in the Q&A session. With that, I will reach out to Amin Saab, who is the CEO of TPL Insurance. We have seen a lot of new initiatives and daring initiatives, I would believe, being taken by TPL Insurance for the last at least 15 years that I know of. And I think a lot of things that have changed in the alternative space, i.e. separate from the traditional agency and brokerage model, has been driven by, or has been, at least impacted quite positively by TPL. So, from that perspective, I just wanted to, reach out to you and touch on, what are the things that drove TPL towards alternative products, and was it of any help, or did it really bring out the business opportunities that you envisioned when you reached out to those alternative products? And again, when we talk about alternative products, it comes with the alternative distributions as well. So I just wanted to reach out to you and find out from your experience and your company's experience how you found the alternative space in the insurance industry.
Point of view, I think your compliments are really appreciated. Thank you so much. So in essence, as they say, necessity is the mother of invention. So in the case of TPL Insurance, the disruption and the innovation that has been caused, while it comes from the vision of the sponsor and the board and the management, a lot of it is also driven by necessity. So as you know, that the sector that we have, particularly on the general insurance side, has a number of players, and at the end of the day, insurance, particularly on the corporate side, is essentially a commodity. But when you live in a country of 220 million people with 160, 170 million phone connections, 60 million plus smartphone users, phenomenal infrastructure, probably the largest database of human beings on the planet, courtesy Nadra. There's a lot of connecting the dots that can be done, and the opportunity is visible from a retail side of the equation. The corporate business is done well. There's still a lot of opportunity to grow. But I think for some reason, because it's chunkier and easier, the corporate business, that is, the retail business has essentially not been as much a focus for the general insurance business players as for TPL. And we saw an opportunity. We saw an opportunity of basically focusing on this segment of the business, and it's played out quite well for us. So overall basis, if we look at the premium that we collect or the footprint that we have from a balance sheet side, it is much smaller than some of the other players in the space who have gone on the corporate side. But what we found was that the retail space is much more stable. It's obviously a volume business and a small ticket business compared to a large ticket business that's typified on the corporate side. And also, I think is a lot of opportunity for growth. So historically, we were an auto insurer, and we have now diversified into a number of general insurance, other products, ranging from travel to mobile insurance to agri. And we find there's a sea of opportunities, which is bigger and probably much far larger than what TPL can do. And the underlying premise is that when you are handling large volumes and low ticket prices, which means small ticket, you need to digitize because there is no other choice. You cannot handle by pen and paper the kind of volume that you are handling the retail element of the equation. So I mean, for example, with a particular partner, we have at one point in time written small PA policies of as many as 125,000 per month. So this you can only do if you're digital. And that's historically been our forte. That's how we've approached the problem, and our approach to the market has been, there's a very large sea of opportunities on the retail side from a general insurance perspective. DNA of ours is digital, and we've used digital technology to really grow the business, and we've grown it by grace of God at a much faster pace than the rest of the industry. So our CAGR has been 25-28% over the past 5 years. I hope I've answered some of your questions.
Yes.
If there's anything else I can elaborate.
Yes, I think, one of the things that kind of dovetails into what you just mentioned is the kind of challenges that you have actually come across. And for the benefit of everybody who is actually listening to us today, reaching out and exploring alternative space to really grow the market size has never been easy, and it comes with tons of challenges. And we just wanted to sort of learn from your experience, what are the challenges that you came across when you were pushing newer stuff, innovations, so on and so forth?
So Noman, the biggest challenge and the reason why penetration is so low is, I give an example, is that for the man on the street, they don't know what to do with insurance. If you take an example of a shampoo or a biscuit or a Coca-Cola for that matter, you don't have to tell anybody, the end user, okay, when you buy that product or use that product, what do you do with it? मतलब shampoo को पीते नहीं है, बालों पे लगाते हैं. Unfortunately, हमारे यहाँ industry का कसूर है. I think collectively and individually we are all at fault, that we have not spent time and effort in developing an awareness for the end user to explain the benefits, and particularly in a country like us where the social security infrastructure does not exist. Insurance can play a key role to basically stopping somebody from at the poverty threshold to dropping into the poverty line, because God forbid they have an accident or they lose an asset which is critical to their day-to-day existence, be it a motorcycle or a motor vehicle, which is their primary mode of transport or source of earning. हमने awareness create नहीं की है. Awareness is a very difficult and a time bound process. You cannot do it overnight by the click of a finger. I think it's a systematic process, but the good thing is that with the new age, with the digitization that has happened, with the connectivity that is coming, with the new generation that's coming, they are native digital. Our generation and the generation before us were not. We are still kind of, in a way, transitionary, but the people coming after us, our kids and the generation after us, they are picking this up at a very fast pace. And when they come into the workspace and they come in and talk about, ownership of assets, be it cars or homes or travel or whatever, they will take to this very naturally because they are native digitals. So the answer to your question is, what are the primary challenges? A is awareness, that people don't know what to do. And B, it's about the customer journey and the experience. Insurance should not be sold as a negative connotation product. It's a lifestyle facilitation product. You take insurance to facilitate and help you get the benefits of your lifestyle, whether you own a car or you are traveling, so that if there are financial losses related to that lifestyle decision that you're making of owning a car, then insurance can help you mitigate some of that, or actually help you, kind of get over that hump that you have of having an accident or having a theft or whatever that issue is. So it's about explaining the utilization and building the insurance awareness. And then the biggest and the most critical element of it is distribution. When you're talking to the retail space as compared to the corporate space, the most important aspect is that this should be available. जिस तरह head and shoulder की लड़ियां बिकती हैं परचून की दुकान पे, इस तरह आपको इंश्योरेंस की अवेयरनेस होनी चाहिए और इस तरह इंश्योरेंस बिकनी चाहिए, स्मॉल टिकट। और ये हमने करके देखा है, इट्स पॉसिबल, इट कैन बी डन. It takes a little bit of effort, but when it takes off, it does phenomenally well. And there are current examples in our industry where small ticket items are being sold in eye-watering numbers. So I think it's just to summarize, awareness building is required, and a strong distribution base is basically you're integrating through open APIs or getting more conventional partners like banks or telecom companies, even airlines, to actually become partners in selling a lifestyle whereby your insurance products are bundled into the whole experience.
Thank you, Amin Sab. And I think one of the things that I wanted to sort of, get more thoughts, on from you is what you just mentioned about the generation, the youngest generation, the Generation Z or whatever you want to call them. You call them the native digital. I think that's that's very important to sort of reflect on. We've got more than 65% of the population today sitting in or living in Pakistan who are younger than 30 years old. And my question, being part of this industry for a very long time with ourselves as underwriters and elsewhere now as well, is what have we done as an industry to really reach out to this generation? Have we done anything phenomenal, or are we still trying to push whatever is there already in the market for so long to this generation? So this is, and the reason I'm reaching out on this to you is because you actually touched on, one of the most important aspects of this, reduction of protection gap, and eventually for future as well. These are the ones, or this generation is the one who's going to drive the reduction. So, your thoughts on this, please.
So, Noman, the answer is yes, there is work being done. Is it enough? Given the sea of opportunity and the vista of opportunities that exists, I think not. When we compare ourselves with India, we compare ourselves with parallel market, be it Vietnam or Bangladesh, or we see ourselves being far behind. But that said, I think we have the building blocks. It's about connecting the dots. And what is very heartening to see, particularly from the regulator, we see a lot of support coming through. As they said, I was just talking to one of the participants in the first cohort only this morning, and talking about how they are looking to transform the digital insurance space. So there is a lot happening. But typically what happens in the digital retail space in particular is that there is a long tail before you see the results. So these things cook for a while, and all of a sudden they emerge on you, and they take over. I mean, we've seen this in the transportation sector, but all of a sudden in Karachi, you used to see airlift and swivel. They've disappeared equally fast, to be fair, but even the Careem Uber experience also, these are quasi-digital experiences where, platforms were being used and the traditional brick and mortar asset ownership were absolutely put away, and a new model was kind of used. So yes, I see some activity going on. Is it enough? Major sea change that's about to happen.
Okay, thank you so much. I think it really reflects a lot of light on this particular subject. And with that, I just wanted to reach out to Mr. Kashif Naqvi, who is the CIO of Jubilee Life Insurance, and I believe one of the very few players in this particular market that embraced digital much before digital really became known to this market. And I think there must be a lot of internal selling that may have been required, or a lot of effort that would have been required to really embrace that change. And I just wanted to touch base on that. We hear a lot about digitization, whatever you call it. But as a company, when you started this journey many years back, and you have, mashallah, one of the largest experiences in this space as well. Just being digital, do you think that's sufficient enough to expand this particular market? Or there is something else as well you believe that really needs to be looked at?
Right. Thank you, Noman. Pretty interesting question. And I would concur with Amin Saab that corporate business is pretty easy. That's the big money, and a lot of people focus on that. It's really the retail side which requires a lot of attention. And I'll be talking more particularly about the life insurance. Life insurance actually entered into the retail side of the things pretty early. And there were alternate distributions like bank assurance and all. Jubilee Life also worked pretty heavily in that, and that is why in 2019 on the retail side we had something like 45% of the private sector new business share. Now the same logic applies in a bit transformed way in the retail side also. Typically, life insurers have shifted their focus from middle classes to wealthier clients. And we are working, like most of the insurers in the retail side, life insurance are working on an average ticket size of 100,000 a year or something like that. So they've really they need to readjust themselves to the smaller ticket size. In the online arena, you don't sell policies of 100,000 that easily. And there are a lot of KYC requirements, so you need to focus on the smaller tickets. Now that opens a lot of difficult questions for the insurers, especially life insurers. They must develop product, they must develop process, and most importantly, they must develop the instincts to serve this small ticket. We really don't know how to serve these small ticket segments. And it's like, if you talk about life insurance, it's like teaching elephants how to dance. It's very slow, they're big giants, and then you have to, like, from 100,000 ticket size, you come down to 5,000 ticket size, and you really don't know what to do with them. So that is where a lot of things come in. So KYC, we have talked about it, we know the challenges. Similarly, processes. We must change the processes if we really want to leverage on digitalization. We can't go on with the paper-intensive processes. And again, like if you have to change a beneficiary in a life insurance policy, you need a lot of papers. Why? We have to start asking these questions to ourselves. Can we do it some other way? Can we simplify the process? I understand that in life insurance, changing the beneficiary can be kind of a financial endorsement, but things have changed. It has become a pretty common thing. These things need to be looked at in a very, very different way. For digitalization to work, you must change the processes, you must change the instincts how to deal with this kind of business. You can't deal with it with the same philosophy which we have been using for last X number of years. Similarly, digitalization, it's not about technology. It's all about understanding the consumer behavior. And then after understanding that, serving those customers. Technology is there, you can do wonders with technology, but are we really doing any analytics on that? We can create these magnificent portals, mobile apps, but are we actually measuring the clicks? Which click takes how much time, and on which click the consumer runs away? We look at the funnels, but again, those funnels are primarily driven by the premium. Where did the customer go out. So we need to do a lot of analytics, and these analytics are not just about the premium, not about the ticket size, not about the demographics. If we really want to excel in digitalization, we must actually try to understand the consumer behavior. They are using our platforms, but how they are using it, when are they using it, what do they want in it, that is. Now, coming back to your question, what is digitalization sufficient and how did we go about it? Well, like I said, a lot of things need to be done to enhance the digitalization. It's not just technology. You have to change the instincts, you have to change the processes, and most importantly, you have to change the mindset of the people. Look, things can be done differently. If we keep trying to sell insurance the way insurance has been sold for so many years, we won't be able to succeed. We must, as insurers, we must look at FMCG industry. How do they sell? Can we do something in insurance that can be sold that way? These are the questions that we really need to ask. And fortunately, at Jubilee Life, we have been asking these questions. And that is why we started on this journey a lot earlier, probably 4 years back. And this explosion has to happen someday. You can base it on the Generation Z, millennials, everything, but this explosion has to happen and you really need to be ready for it. You can't just wait for it. You have to learn and how to deal with it. That is how you must experiment in the digital space. You must keep experimenting. You must invest in it for the learning, because this is ultimately going to happen. It's just a matter, do you want to be ready for it or are you just waiting for it? That's what I would say.
Great. I just wanted to sort of attach another query that we had, and you also mentioned about whether you call it the DNA of your of the industry, you call it the mindset, or the way the industry functions. One of the key things when you talk about distribution, and again, I'm coming back to this, because obviously we're talking in this session about how to sort of facilitate the overall environment whereby we can kind of positively impact the premiums and reduce the protection gap. And one of the things here is the traditional distribution. And historically and generally speaking, if you look at it worldwide as well, in life insurance industry, the traditional distribution, i.e. the face-to-face, the agents, the brokers, they, because of the nature of the product itself, I believe, they have been excelling in the way they have been doing business. But when it comes to digital engagements, there is still work to be done. There is still, successes to be documented. From your perspective, from Pakistan's perspective, and from a life insurance, a leading player in this country's perspective, I just wanted to pick your brains on how you have handled the traditional distribution, and have you been, reaching out to this distribution with tools, if any, that are different from just a paper and a pen, and what was the reaction?
Right. Numan, given the current situation and the current consumer, you can't do away with the traditional distribution, that is face-to-face selling. In Pakistan, a lot of, especially in life insurance, where we have investment products, we have long-term contracts, 20 years, 25 years, 30 years, then you have whole life plans. And why do people actually take out these plans? For the wedding of their children, for the education of their children, retirement plans. These are our typical products. So these kind of products, what is the consumer life stage at which the consumer takes out these policies? Married with kids, otherwise why would somebody want an education plan for the kids? So that age group or that life stage is still quite dependent on the face-to-face selling. It's not the insurance company, it's actually understanding that customer, what kind of product is he buying, and with that kind of product at that age, does the consumer actually want a face-to-face thing? Yes, in the medium term, I would say the traditional face-to-face distribution channel is not going anywhere. It will continue to be the dominant distribution channel. Now, when you talk about digitalization, how do you facilitate this channel while trying to experiment and learn on pure digital space, which is online sales, non-face-to-face? With digitalization happening on every arena, you need to equip your traditional distribution sales force with digital tools. Why can't they actually go to a customer, show all the product details, finalize a plan for 25 years, and there and then log that deal and sell the policy? And why can't insurance company deliver that policy before that salesperson actually leaves the customer? This is all digitalization. Now, in such plans, there are a lot of complications also which we need to sort out. What about the medical examinations for large ticket policies with heavy sum assureds? Can we simplify those? Can we enhance the limits where only medical questionnaires are sufficient? We need to look at all those, but essentially, to answer your question, we have been trying to equip our traditional sales force with a lot of digital tools where they can actually go to the customer and sell the policy without having to go back to the office, pick up the forms, submit the check, and blah, blah, blah. So we have been trying to equip, we have in fact launched an agent app where the KYC can be done on that app while the salesperson is with the customer. I hope that
great. Yeah, it does, and I think there's no magic solution to it as far as I understand. And I think that's where this conversation is what we're trying to sort of build and find out how we can facilitate the industry at large and also different stakeholders within the industry. I just wanted to head out to Hisham, who's the chairman of IAP North, and also he's heading the northern region, and also the consumer business for IGI General Insurance. One of the things that Hisham, yourself, and myself have been discussing and struggling for ages now is the enforcement of mandatory insurances, meaning, for example, the likes of third-party liability. Insurance penetration, you and I both understand, and I think the audience also understands it very well, can get a massive boost by just enforcing these mandatory insurances. So, I just wanted to, find out from you, what are the kind of initiatives that IAP is taking from its own forum to kind of work together with SCCP to find a mechanism of enforcement, and also in parallel, since you represent IGI General as well as an industry player, what are you as a company, how are you sort of approaching this challenge or opportunity, I would say?
Thank you, Noman. In fact, this is a very important question, and probably the most important question for general insurance industry, because as we know that in Pakistan, there are about 20 million odd registered vehicles, and most of them are uninsured. So we are talking about a premium of about 35 to 40 billion rupees, which is still untapped. And on the other side, when we see the situations on the road, WHO data points out that about 30,000 people die on the roads every year. So as Amin Saab was mentioning, that a small ticket product like a personal accident product can just bring the family back to its feet. At the moment, there is absolutely no compensation which is given to most of the road accident victims in this country. And apart from deaths, there are injuries as well, which makes a person disabled for whole of his life. So again, from IAP Forum, what we have done back in 2017-18 was that there was a draft regulation which was an amendment to basically the Motor Vehicles Act 1938, and the draft was circulated among the members, and all the suggestions were given to SECP. Now, the only thing is that the draft has to become a law, number one, and number two, then it has to be enforced by the provincial governments through their registration offices, by enforcing it on the renewals of registration, as well as through the provincial what we call the traffic police, so as they can just check on the people that whether they have this mandatory third-party insurance or not. So this is from the IAP perspective. And secondly, if I talk from IGI being one of the market players, we see some excitement in this because I was just running through the data of India, and where we see that the minimum charges for a third-party insurance is not less than 2,000 to 2,500 rupees for a coverage of about 7.5 lakh rupees, which is mandatory as per the Indian law. So we can implement the same thing here, but we need to bring all the stakeholders together, the provincial governments who are enforcing it, the regulator who has to promulgate a law, and the amendment in the 1938 Motor Act. And as an industry, definitely we need to back it up as a product as well.
Great. I would just sort of reach out to Wasim Saab on the same point, since we have the honor of him being here as part of the panel. Wasim Saab, this is one of the things that as an industry we have always been talking about and trying to find a solution for. Can you sort of shed a little bit of more light on how far are we in terms of getting this enforced or implemented, and what are the steps that you are taking as of now to sort of help or kind of facilitate this process for the overall industry?
Thank you, Nauman Bashir. It's a very important issue, and it's outstanding since long, and Commission is continuously following this issue, because as it does not directly comes under regulatory purview of the SECP, that the SECP is implementing agency. The relevant ministries are basically the Ministry of Commerce and Finance. SECP proposed the necessary amendment in the mandatory insurance bill, and we have forwarded it to the concerned ministries, and we are continuously following them on at least on the fortnightly basis. But apparently it's not a priority at the different ministry level and coordination. So as an advocacy point of view, we are continuously following this. We acknowledge the importance of this, that it's a very important issue. It should be solved, and should be solved at earliest. It will give a very good boost to the industry development. But as I said, that it's not directly come under the purview of the SECP. We can provide on the advocacy and necessary coordination with the ministries, so that this act should be passed and the necessary enforcement agencies implement it in the provinces level.
Okay. Thank you so much for this update. I would reach out to Barrister Uzair similar on this particular aspect as well, whether since you are working on various engagements with the SCCP, whether it's to do with the laws or ordinances, can you sort of identify if you have come across any opportunities for structural improvements that kind of that can help facilitate things like getting enforcement, for example, done for mandatory insurances, or for that matter, facilitating the digital ecosystem by the InsurTech players. So, do you think there are opportunities for some kind of structural improvements from a legal perspective as well?
Thank you, Naman. So I'll start off by telling you that as a regulator, I've really enjoyed the experience I've had working with the SCCP over the last couple of years. I worked with them on a number of reforms around the technology sector. Most of the discussion that I've had has been industry agnostic. So, for example, the changes that have been made to the Companies Act, the changes that have been made to the regulations associated with further issue of share capital regulations. For example, the changes that have been made by the State Bank, a lot of that has created an environment in which InsurTech can definitely flourish. So I would say that as a regulator, there is a certain amount of receptiveness. I don't know if Waseem Saab recall or not, but him and I used to we did a roadshow together, talking about a lot of these reforms on the regulation side and the rules and on the statutory side in Lahore, Karachi, and Islamabad. So it's been a wonderful experience engaging with the industry like we are doing right now. So that's the one part. The other is, of course, there is a certain amount of reality that we have to live under. And for example, you have mentioned enforceability, that in many ways is maybe outside of the purview of the regulator, because a lot of the enforcements then subsequently have to happen on the in different courts, for example. Having said that, I think insurance has sort of has always been treated a little differently. So as everybody who is here knows, that under the insurance ordinance, the check and balance on the insurance providers are a little more stringent, and it's not treated as a simple commercial agreement between an insured and an insurer. And similarly, the roles and obligations of the industry are quite well detailed. I do feel that what Rahim Saab said at the beginning is probably required, and I guess Waseem Saab also discussed the same. A lot of the technology related changes have to be incorporated in the law. I think the amendments that have been tabled by the SCCP to the insurance ordinance are probably a step in that direction, and in fact are definitely a step in that direction. And therefore probably we will need to introduce those changes into the parent legislation, which I guess it's the government's job. And if we have those changes as well, then obviously the regulator, in this case the SCCP, would probably be better placed to help and facilitate and do a lot of things that it wants to do and has been discussing with us today.
Great. So basically, what I could understand from your conversation is that the steps have already been taken, and there is a lot of movement when from SCCP perspective when it comes to the ordinances and also the SROs that have gone out. A lot of this impacts the industry we are talking about today, whether it's from an incumbent carrier's perspective, meaning the insurance company's perspective, or an InsurTech perspective. So, if I talk about the InsurTechs, we were talking about that earlier as well. it's a nascent industry. It's still on its, on its in its initial phases of development and growth. I just wanted to find out from you and your experience working on the legal side, how well do you think the startups and the younger companies in this particular ecosystem are when it comes to the regulations, the compliance of these regulations, and then the right appropriate engagement with the insurance industry?
I think you put me a little on the spot, because obviously it's a difficult question, I feel, to answer, because I'm sure again you guys will confirm that there is probably a spectrum, right? So there is definitely those players in the which I would and you would classify as a startup or startup in the InsurTech space, who are definitely well versed and are trying to be compliant with the regulations that are there. And obviously there are those who are a bit less so, and therefore I think it's a matter of and I wouldn't put a burden on the regulator, because I think I wouldn't phrase it in that sense, but what I would definitely encourage is for the regulator to continue to do the engagements that it is doing, like this session, right? So having this conversation actually not only helps the established players, but also probably somebody who's listening in and is considering an interest in the InsurTech space would be benefiting hugely from this exercise. And therefore, I feel that the conversation that the regulator can have can enhance the overall understanding of the industry and widen its reach.
Okay, great. Thank you so much for sharing that with us. I just wanted to kind of sort of reach out to Hisham, and one of the things that was there, one of the areas that we want to sort of reflect on was again, the level of engagement that is required with the younger generation and the industry, players in the market. So, just wanted to pick your thoughts on how, as insurance companies, you're sort of facilitating that process, and we've gone through this journey ourselves together as well last year through the COVID crisis. How things had to sort of change overnight. But how are you carrying that on for the younger generation to ensure that the penetration and the premium generation carries on, and hence reducing the protection gap?
Numan, in fact, definitely COVID brought about a drastic change, and insurance sector braced up to the challenge quite quickly. So I think during even the lockdown phase, the policies were issued, and there was quite a lot of support from the central bank as well, whereby the banks were accepting the policies in the digital format. But after that, it has definitely become a norm. And insurance companies are now investing heavily into apps. They're also investing into the payment gateways because usually it was not a norm to get payments online. It was more of a one-to-one interaction between the agents and the customers, and they used to bring in the premiums. But now the things have changed drastically, and I think companies are now focusing on, again, these small ticket items. We have seen the example of Bima being successful in our country. They have been selling millions of policies literally in a year, small ticket items. And again, all these technologies and different modes are being adapted by the insurers. I would say the top 8 to 10 players, they are quite keen in investing in technology. and improving the user experience and the customer experience. So this is happening, and I think that Insurance Association of Pakistan is also collaborating on that. Another area which is also very important and for all of us in general and life industry is to work closely with government on the Sehat Sahulat program, which is going to bring another close to 50 billion rupees of premium in industry. And definitely right now the state-owned insurer is doing it, but what we are seeing for the future is that private sector has to come, and for that also the technology has to be there. We need to have the right infrastructure, both on the regulatory side as well as on the technological side, that we can ensure all the population, because the government is envisaging a universal healthcare plan up to year 2025. So that means that ensuring the entire population. So for that, you need quite a robust IT setup in place, and you need connectivity, you need proper data setup at all levels, both at the regulator level, and again, the customer grievance service needs to be there. So I think that a lot is happening in insurance sector, and the insurance penetration is definitely going to increase. One request that I would also like to make on this forum is that I have seen that the regulators, Noman, you have worked in Saudi market, you must have seen that they publish the data in quite detail from the regulator side. So I think what we also need to do is that both from IAP and SCP side, the data about the companies and a detailed analysis about how insurance industry is working should be published on a yearly basis. So as the customers can get to know about the insurance industry, you can attract investors as well. And this is one thing which is very important, which is kind of a missing link these days.
Thank you so much, Hisham. From your point, I've got two queries that are there, and the first one I'll reach out to Mr. Amin on the data side. I think this is something that is extremely important. Amin Sab, with regards to data, Hisham just reflected on that. As an insurance company, what are the kind of initiatives you have recently taken that have actually benefited the industry as a whole when it comes to data and its sharing? And how do you foresee data itself being one of the biggest opportunities that exist within the industry to create value, and not just create value, but increase premiums and growth as well?
Okay, so essentially that is the new frontier. I think we are all heading towards the data being more important. And what we see recently, if you look at valuations, particularly of tech companies, where you are seeing valuations are driven by the data that companies have. So in a parallel world, we have a sister company which has the only maps business in Pakistan called TPL Maps. And we have seen a phenomenal amount of interest that has been generated. It took a few years for that to bed itself. Just giving an example of how data becomes important and how it gets monetized, where actually from being actually a revenue loss making and a not even breaking even company, that Maps business is booming. It's integrated as part of our tracking proposition. But if you just look at the numbers it's generating in terms of the data that it's providing to various integrated apps that it's now working with. So data on its own means nothing. It's just ones and zeros. Where it starts becoming useful is the interpretation that comes with it. And now what we are seeing is, as in the maps business, POIs are okay, but once you start putting POIs in context of integrations with various mobility companies, like, for example, Food Panda or Daraz and other people, where they are using this data now to make decisions, to actually bring in efficiencies from a logistics perspective. Similarly, in insurance, what we see is that we have data, but it's not been aggregated. So yes, there is claims data, and there has been an effort done through the CDC to put that into a central custody. But as Hisham was saying, there's a huge amount of data available at the provincial level. We all know what the provincial car registration authorities have data about which cars are registered, which cars are not registered. Nobody's ever cross-referenced that to saying that has the car paid a road tax? Is the driver who's driving the car, on whose name the car is insured, does he have a valid license? Or for that matter, the thing that we've been talking about at the industry forum for a very long time is third party. I mean, it's a slam dunk. Every time, all you need to do is just plug in the NIC number, cross-reference it with the car registration number, and you know whether there is insurance that is valid on the car, which is what you see happening in the West. They scan your number plate, they know that you've got insurance or don't have insurance, they know you've paid the road tax, and they also know your claim history in terms of if you've been fined previously on your driving license. So the data exists. I think the industry is lagging behind in terms of translating that and connecting the dots. I see some efforts that are being made currently. We are doing something similar. It's just a start. I think there's a long path ahead of us. But where we stand currently is, I think we're very privileged because a lot of the work has been done. As I said, the NADRA database exists. The provincial road authorities have the data in terms of car registrations. It's about connecting the dots, and I think some help is required from the regulator to help on the regulatory side and potentially help with the plumbing. So the CDCs of the world can really be useful as becoming data custodians and depersonalizing data, because that's another consideration, that you have to be sensitive to data protection, which is a big thing in the West. And there can be a lot of utilization done. So I think we're just starting that journey as far as my exposure and my experience is concerned. Does that answer your question?
Yeah, it does in a lot of ways, and I think I'll just add to it a little bit about my, in fact, my experience in my previous, one of my previous insurance, jobs. For example, in Saudi Arabia, one of the biggest advantages that the industry today has is access to the database that exists of Najm. And Najm is one of the companies that takes care of registering claims and logging of ethanol and all that kind of stuff. So there's a sea of opportunity from not just from a growth perspective, but also correcting your book of business from an underwriting perspective. So hence, data. I'm glad, Hisham, you touched on that. I think that's one of the key areas that we need to sort of also look into. One of my last questions from Mr. Wasim is to do with the payment gateways. Again, Hisham mentioned that in one of his in his conversation just now. When it comes to the digital distributions, and for example, with the likes of mobility digital distributions, that they are being that they're coming into the market, and they from that perspective, are you kind of sort of facilitating these distributions to have their own payment gateways, or you believe that there is something that needs to be sort of worked on from a regulatory oversight perspective to provide certain guidance to these distributions? And this is one of the questions that I had posed by somebody from the digital distribution space.
Yes, Noman. Payment gateways, they're very important for the digital distribution. and it's a very important component. We being a regulator try to facilitate the process of the payment gateways and the registration and the licensing requirement. Currently, the payment gateways are licensed by the SCCP, and there is a pure framework for a detailed framework for the payment gateways licensing. We being a regulator can coordinate with the SCCP for any type of the facilitation to the industry for third-party payment gateways or the subsidy models that insurer can go for a payment gateway license.
Great. Thank you so much. I think it clarifies a lot for the question asked. I'll just I'll take this opportunity. I'll just request Aksa, if you could just put up that one slide as a summary. I just wanted to sort of touch base on certain things that we discussed, and some of the things that are there in terms of the opportunities. So from a protection gap perspective, we had a discussion today with regards to a lot of initiatives being undertaken from a regulatory standpoint, a lot of work that is being done in terms of getting SROs being set up or developed for creating that enabling environment. And I think it's not just today that SCCP is actually working on that with the team of their legal consultants. It's been some time that SCCP is actually facilitating the industry from that perspective. We also looked at the impacts from a potential market or target market perspective, and the fact that Generation Z or the youngest ones of us are going to be driving a lot of our decisions for the industry. And again, they are the ones who are going to be impacting how we take this protection gap forward. We had a discussion on alternative products and on alternative distributions. And I think, from that perspective, the InsurTech space provides that collaborative environment for all, whereby they excel in certain areas that can facilitate the industry and provide that opportunity for them to reach out to those products and those distributions. We heard a lot about hundreds of thousands of customers within a month, and this is mind-boggling. But this is not something that doesn't happen elsewhere in the world, and this is exactly what you would reflect on new intermediation. If you see one of the things, aggregators are doing a wonderful job in this particular market, and I think this is where that opportunity for them to sort of outgrow what they're currently doing also exists. And I think a lot of the conversation we heard today points towards doing something that kind of opens up the windows into the digital space of multiple distributions. And some of you as incumbent carriers today are already doing it. And I think from an InsurTech space perspective, it's important to kind of highlight, for the benefit of everyone, that space is open for everyone to sort of tap into. 125,000 or 200,000 customers, it's not a big deal. We've got millions of customers being serviced in multiple platforms that exist out there. So why leave that opportunity? So that's one of the things that I wanted to sort of reflect on. And then, from a value chain perspective, we heard Rahim Saab talk about the complete value chain. And I think it's important to today reflect on the fact that the whole value chain itself, not just the front end sales, is actually driving the value for the industry. And I think that's what is also going to help eventually in the future to sort of reduce the protection gap. And those, the things that you see in that value chain, distribution is part of it. Then you've got these intermediations driven by the aggregators today. And then, the APIs, the embedded insurance, and then you've got the servicing aspect, the processes that Kashif Saab was talking about. I think that's very important to sort of reflect that, it's not just the fact of having an app out there. You need to have your processes aligned, and you need to have the customer understand those processes as well. Otherwise, that effort is going to go, as a waste. So the insurance value chain, the complete end-to-end value chain, is extremely important. The cultural shock is another thing that we kind of touched upon. Kashif Saab also mentioned that, and I think it was very evident in some of the conversations that we had. It's there, and I think the more we create the enabling environment to kind of assimilate the new technologies, the new ways of reaching out to different people, to expand this pie, to reduce the protection gap, the better it will be. And I think it's never going to be an easy task for anyone. If I stand up and say, well, the incumbent carrier or the insurer can just stand up and just click a button and the cultural shock will be gone, it's not going to happen. It's a concerted effort by every one of us sitting in this session as a facilitator to really remove these challenges that are present in our way. And I've said it in many forums before as well. The generation working in the insurance industry today is ready to really embrace the new stuff, the new way of doing things, and obviously hand in hand with the traditional way of stuff. So let's not just discount the existing incumbent carriers talent pool. They have a lot in there, and they can really help us develop that market and reduce the protection gap. And I think one of the other things was the contribution that I see from IAP. I think it's a wonderful contribution. And I think, Hisham, one of the things that we'll request from your auspicious platform is to promote within your audience, which you are doing at many occasions. There's one coming up in the near future as well, to really open up this dialogue, because the more we get over this barrier of that stigma, the easier it will be for any of the newer entrants to provide that collaborative environment. So that's one of the requests that I had. One of the things that it was touched upon by Kashif Saab, as well as briefly by Amin Saab as well. Traditional distribution, the opportunities and the threat. I think it needs to be at least reflected in this conversation today, that digital enablement or the InsurTech space should not be taken as a threat to the traditional distribution. It shouldn't actually take those steps as well, because unless and until you have a collaborative, assimilative approach towards the traditional distribution and the way things are being done, you will always have barriers. And I think to date, the aggregator market has been extremely well set up in terms of having a hybrid approach, an approach that is inclusive, and it's an assisted approach. And that's why that industry, alhamdulillah, is doing what it is doing today. So it's equally important for us to sort of reflect this voice towards the incumbent carriers as well, that the InsurTech players do not and should not and will not hopefully be creating that barrier for the traditional distribution to flourish. One of the other things that it's important to sort of reflect on again is the reinsurer's appetite, especially it goes hand in hand with the new products. We are working in the market where we come across many challenges, and I think as industry we need to sort of open up candid, tough conversations with the reinsurers for different products that the reinsurer is not really aware that this market can really do. They're doing it wonderfully well elsewhere in the world, but for Pakistan, I think this is a concerted effort that's required on behalf of us as InsurTech players, or as from the audience, the incumbent carriers as well, to really alleviate those concerns of the reinsurers, to build that appetite, once again leading to the reduction in the protection gap. So again, and lastly, see, digitalization, the solutions, the platforms, they're all good to have. They are the end result. There is a lot that is going on behind the scenes that will deliver the results through those platforms. So while platforms and the buzz around the mobility and the apps and the platforms will be heard for days and months and years to come, it's important to understand that the success of those platforms is really driven by what's going on behind the scenes. And these are the things, some of the things that are going behind the scenes, and one of the things that's not in this slide is data. We just talked about that as well. So I wanted to take this opportunity to kind of summarize the conversation we had in the session today, and kind of sort of close this dialogue. I've got a few questions. I think from a process perspective, we've already answered. I think from SSCP perspective, SSCP is extremely clear in terms of processes. They've already reflected on that. There's one more question I hear is about a blockchain and the smart contracts. So from this is a question specifically from a regulator's perspective. So I'll reach out to Waseem Saab on this. Waseem Saab, what is the current initiative that SCCP is currently sort of working on, or already deployed maybe in certain cohorts for blockchain, and how that can help the insurance industry?
Yes. In the first cohort, we haven't received any application which is specifically to the blockchain and smart contracts. And we are also expecting something in the second cohort. We are encouraging these technologies through a sandbox process, so then we can mutually learn this concept and then go for a full-fledged regulatory framework for this new technologies.
So are you expecting any entries into the second cohort for blockchain?
We are hoping that there's if there is some participant in the market that will come with some idea.
Okay.
But we haven't received any such application to date.
Okay, I hope that answers the question. Again, I'm just opening up. This is just a small time of maybe 5 or 10 minutes for panel-related questions. So if anyone wants to sort of contribute something to the conversation, please feel free to do that. This is our time to sort of reflect on some of the things that we discussed. Okay.
Have we covered everything from the Q&A that was submitted?
Yeah, because we've already addressed all the questions that are there already in the conversation. So
awesome. Okay, then we can, I think, move towards any closing comments from any of the panelists.
Yeah, please, any closing comments from any one of you as panelists? Kindly feel free to sort of jump in.
Thank you, Noman. I think a great initiative. My compliments for you to organize it and get this panel together. It's been a great learning experience, and I think it's generated the enthusiasm that I think all of us collectively share. There's a lot to be done, and Pakistan is a great opportunity from an insurance perspective, particularly the digital engagement perspective, and look forward to hopefully having more of such sessions going forward.
Thank you so much, Amin Saab, for the closing comments. Kashif Saab, would you like to say something?
Noman, this was a great event. Thoroughly enjoyed the last 2 hours. We had some very good discussions, And it's heartening to see that we are on the right track. We might be a bit slow, but we surely have the right ingredients, and we will get there.
Thank you so much. Hisham Sab, any final comments?
Numan, first of all, I think a great initiative from CXO and your side to organize this webinar and again start a discussion which is very, very important in terms of the future of insurance industry. And I think the debate generated today will certainly set up us off to some new initiatives, both from the Forum of Insurance Industry as well as from the regulator and IAP. So I think a great initiative, and hopefully we'll carry on with such discussions in future as well.
Thank you so much. Wasim Sab, any closing comments from yourself, please?
Thank you very much, Noman. It was a great initiative. And SECP is always available for providing the necessary supportive and proactive regulatory support to the InsurTech industry.
Thank you so much. Barrister Uzair Saab, anything that you would like to sort of reflect on as closing comments?
No, I think most of it has been discussed. It's been a pleasure to be here, and really enjoyed the conversation that happened over the last 2 hours, and looking forward to continuing this engagement. And finally, as I said, I think it's important to continue to have these conversations, because it obviously improves the overall understanding of the industry and widens its scope. Thank you.
Thank you so much. With that, I'll just thank all of you for your kind presence, the audience as well. We've had a wonderful conversation as experts from the industry have really shared a lot of information with us, and we hope to sort of continue these discussions in the future as well. So with that, we're just going to close out, and thank you so much for everyone to have connected and listened to this particular webinar. Thank you so much. Aksa, over to you.
Thank you. Thank you. Thank you very much to all the panelists and all the attendees who've been a part of today's session. Just as a closing thought, one of the main reasons why we put together events like these with partners like Ozoned Digital is to really get the conversation and the narrative going on enterprise transformation. So any industry, and I think it's one of the first few discussions that we've had on InsurTech. So it's been a great learning for us as well. Thank you once again, all of you, for your time. Thank you, Noman Saab, and all panelists. We'll see you again later. This is us signing out.
Thank you, Ji. Allah Hafiz.
Allah Hafiz.